Today, UBS stands as the largest wealth manager on the planet. $2.5 trillion in assets and the envy of the world's bankers. This is the institution CEO Sergio Ermotti hands over after almost a decade at the helm. But in 2011, it was a very different story, repairing a tarnished reputation from massive losses in the financial crisis and reeling from a $2.3 billion trading scandal. That drove out his predecessor. UBS was among Europe's worst performing banks, and Ermotti had his work cut out for him.
UBS has named interim chief executive Sergio Ermotti to take the job permanently.
Sergio Ermotti has got to do three big things. He's got to convince the shareholders that he's got to control risk. He's got a grasp of what's going on in the investment bank. He's got to bolster wealth management and reduce leverage.
Bloomberg's been speaking to the new boss of UBS, Sergio Ermotti.
Sergio, great to have you with us today on Bloomberg. Sergio Ermotti, welcome to Bloomberg, sir. The best quarterly profits since 2010. On each occasion when we've sat down with Sergio Ermotti, he's had a great numbers story to tell. You're 3 years into this. Give yourself a mark out of 10. How have you done?
It's Christmas time, so I'm gonna be very generous with myself. So I give a lucky number, 8.
Orchel is gone. Zeltner is gone. Are you all in and committed to this bank going forward? What do you want to say to the market today?
Well, of course, I'm committed.
Sergio Ermotti, welcome to Bloomberg. Your final set of results after 9 years at UBS. Capping his tenure with one of the bank's best quarters ever, UBS's long-standing CEO is ready to hand over the reins. This is a conversation with Sergio Ermotti. Sergio Ermotti, outgoing CEO of UBS. Welcome to Bloomberg, sir. 9 years, long tenancy. What did you enjoy the most in the past 9 years on the job, Sergio?
Well, I would say that I enjoyed most of the days, and the fact that it was always something new. I think that the early days was managing, the aftermath of yet another crisis for UBS, and then and starting to reposition the strategy and working on the execution and getting tractions with employees and clients was the first focus. But then, over time things have changed a lot. I have to say that. I'm not so sure I enjoyed that a lot, but I spent a lot of time in resolving legacy matters, so that was probably less of an interesting part, but still, at the end of the day, a necessary part of my job.
If we look back at the strategy, I mean, you're probably going to be remembered most for downsizing the IB. I look at your trading background in your career. Did that give you additional insight when it came to downsizing the IB?
I think so. Not necessarily the trading background, but the fact that I've been working for many years for a very large investment bank, and also later on I was still involved in doing investment bank and investment banking businesses before joining UBS, reinforced my belief that you will need to be a one-stop shop in order to be successful in the investment banking world. And in that sense, I knew that UBS had excellent capabilities in equities, in FX, in equity capital markets, in M&A, and strong franchises in Europe and in Asia, and they were good and enough to sustain a business model that would serve well clients and shareholders.
If we look at your career, taking risk has been a core part of that. Do you enjoy taking risk?
Well, enjoyed, when I was younger, probably more than today. So I think that's, but I think it's part of the job, taking a calculated risk. I mean, I always, felt that the vast majority of the risks I've been taking were, thought through and calculated risks and yes, from time to time you need to let a little bit more your stomach, drive a risk decision, but the vast majority they were driven by risk assessment and, most importantly, risk-reward assessments.
So do you miss being a trader? Is there a part of you hankers for that earlier career?
No, that's to be honest, I think that I stopped really being involved in day-to-day trading when I was around 30.
If we talk about the investment bank, you and I covered the numbers last week. Is the investment bank the right size as you leave now?
I think so. I think that, if you look at in all those segments and areas where we choose to compete, we are one of the leader. As I mentioned, equities in FX and also in many part of the equity derivatives segments in structured products. I think that also in the areas of investment banking, we are a leader where we choose to be a leader, and therefore, we should not be too obsessed about size.
But I looked at the numbers for you versus, let's say, Goldman's and a couple of others on the street, and I thought to myself, there must be a sneaky part of you, because you're up there. There must be a sneaky hankering. Maybe it would be something which could have been bigger.
Look, I think that we are really focusing on not only on the size, but our ability to generate good risk-adjusted returns. And if you look at our returns compared to the capital we deploy for the business, you look in any measure, the VAR utilizations we have in our business and return on risk-weighted assets, we are among the best, if not the best. So we like this way of having a client-focused, capital-light business model in the bank in general, but particularly for the investment bank.
Look, last week you said to me, the market is the market, Manus, in terms of the equity valuation. But I look at the price-to-book valuation, and the detractors would say that you should have cut costs harder, deeper, and more aggressively. What would you say to those detractors?
That they are simply, from my standpoint of view, I never say that we are perfect in cost, and actually we are taking down cost every year between 500 and $1 billion, and that gets reinvested in new technology, new initiatives. When you are running a 24 billion cost base, you always have to find something to cut costs. Now, our cost-income ratio is structurally higher than some of our peers because we have, on the other end, people that are focusing too much on cost-income ratio. They seem to forget that we have the highest return on risk-weighted assets in the industry by far, and therefore this trade-off allow us to have an efficiency curve, a combined ratio between the way we utilize our capital and cost-income ratio that makes total sense for shareholders. So it's way too simplistic to look at cost-income ratio and say that a firm is efficient and effective in the way it uses its resources or not. The difficult moments are always the one where you are alone, and the good times are where everybody is there and celebrates.
Sergio Ermotti's tenure at UBS isn't just defined by what he accomplished, but those who stood beside him. Among the cast of characters, two loom large: Axel Weber, the chairman, and Andrea Orcel, who led the investment bank. Ermotti and Orcel came up through the business together. But in 2018, Santander tapped Orcel to be the new CEO. It was a surprise move. I asked Sergio Ermotti, what was it like to lose your wingman?
When Andrea told me that he was thinking about leaving, I had mixed feelings because I was very sad and for our personal relationship, but also for the bank to lose such a talented person. On the other hand, the other half was happy because I saw him, really growing into a next level and having a fantastic opportunity. So it's always very difficult to assess those moments.
How much are you driven by remuneration?
Not. My motivation in remuneration was always, when you start to make more than than $1 million a year. So I mean, to be honest, is a lot of money, and there, yes, I'm more competitive because the only thing I care is always to look at what is the person next to me, or the people out there competing with me, how much they make for the same job, and there is a competitive nature coming out in saying, well, this is the market, so I should get paid like in the market. But it's not an issue about absolute money. I haven't done this for money over the last few years. I did it because I liked it, and pay is coming as a consequence of what I do.
Has the industry now got it right between cash, bonus, and long-term incentive? Do you think the balance is correct?
Well, I don't know about any other industry that pays such restrictively like the banking industry. There's not only in terms of cash and deferred compensation, but also if you put the conditions attached to achieving those rewards, both in terms of financial targets, but also in terms of conduct and cultural issues that goes into the compensation. I think that we reached a pretty good levels, I would say, for sure at UBS.
If we look over the past 9 years, where we started and where we've both ended up, we've lived through populism, trial by social media, elections by social media. But as a CEO, Sergio, what is the risk that these things overwhelm you? Did they ever overwhelm you? Or how do you push through those issues?
Well, we are overwhelmed by information, people, recommendations, criticism, and external factors. You need to really somehow being, very focused and selective in the way you cut down the essential part of what you need to focus on and what is an urgent matter versus what it is, noises or less important issues for the activity one is responsible for. So I think that...
How good are you at closing down the noise? How good are you at saying, I need to move on? That's an issue, that's closed, that's finished. Are you very exacting?
I think that's probably, I believe I'm pretty good at that, probably because if, it would be hard to stay in the job for 9 years without being good at this. So, you need to be able to shut down and isolate yourself and isolate topics that are not relevant and be aware that there are priorities that you need to focus on, and you can't fix everything in one go or any issues that is out there externally or even internal ones. You need to focus on priorities.
Were there any major decisions where you were more lone wolf than pack animal with the board?
Well, I think that, the difficult moments are always the one where you are alone. And the good times are where everybody is there and celebrates. So we had few ups and downs. And, I think that overall, again, I always knew that I have a strong team. My former and current group executive and my colleagues in the bank have been very good in supporting me, and so I'm very grateful about that.
What was the loneliest moment?
Well, you have few of them, and I don't feel so bad about being alone. Also outside the job, I don't mind to be alone from time to time and think about, and so it's not so difficult for me. follow your instincts, follow your passion. I mean, at the end of the day, at the end of the day was really follow your passion and follow what you think is great.
After 9 years at the helm, Sergio Ermotti is handing over the reins at UBS. He cut back the investment bank, turning the lender into the world's largest wealth manager, overseeing $2.5 trillion in assets and returning $20 billion to shareholders. He's bidding farewell to one of the best quarters under his belt since he took over. I asked him what he's most looking forward to as he walks out those doors.
First of all, the first day is I'm looking forward not to be away from Zurich and away from work and away from everything, because I need frankly, I think I will need a quite brutal shutdown and disconnect from this very engaging and demanding job, which was been rewarding, but also very demanding. And so I think also I will miss the stamina, that comes with, and the excitement that comes every day. So I need to go very remote. And
can I pry and ask how are you going to go remote? Are you going to leave the phone behind? Are you going to go to a magical island? Where's remote Ermotti?
Well, hopefully COVID permitting, hopefully I can go to the Maldives.
Fantastic. I'll make sure that you just be careful. I might book a trip. How do you want, because I can still go there as well myself. How do you want your era to be remembered, Sergio?
In my point of view, probably, I stabilized the bank further, put the bank into a new path of strategic clarity, and I would say that we capital strengths and solidity, and also operational resilience, and most importantly, I think that reinforced the culture and not what we do, but also how we do things in the organization. So that's probably going to be, the things that I hope, I wish I will remember for.
Look, you didn't take the traditional graduate school route into banking, broking, and your career. Do you think an apprentice today could even remotely countenance getting to a seat like the one that you're in? Is that route still available?
Absolutely. I mean, if I look around in Switzerland, yes, of course, there are many people that have been coming through the apprenticeship route, and they are in very important positions in our economy and also in our political system. So it's almost easier today than it was, 45 years ago.
Do you think it made you hungrier to sharper elbows, so to speak?
It made me more, I don't think if it was hungrier, but more close to the reality. And most importantly, you understand also in an easier way what you like and you don't like from a potential professional path that you are going into it.
Do you think it helped shape your desire for risk, going back to that theme in your 20s at Merrill's?
No, that was, for me, was, the stage one was almost like the culmination of my dream was to become a trader. And, when I got an offer to join first Citibank in the mid-'80s, that was a fantastic opportunity. And then I got another fantastic opportunity to join Merrill Lynch to build their Swiss franc capital market in Zurich. And I was, very young then. And was more on those ages were not about risk and trading, but also organizing and leading and building up something from scratch. That was, probably a unique and fantastic opportunity I got at the age of 27. Was, almost amazing. It
is pretty spectacular, I've got to say. You are one of the longest serving CEOs in banking, so you take those skills. I'm just wondering, what is the skill or the attribute that helped you survive?
Well, I think I was definitely resilience and determination, and also the ability to lead by example.
Let's go back. You took the apprentice road. You're a young lad. You're on the banks of Lugano. Knowing what you know now, what advice would you give to the young man that was making the decision to go into banking?
Well, do what I did. So follow your instincts, follow your passion. I mean, at the end of the day, at the end of the day, was really follow your passion and follow what you think is great. So that was, I got where I got not by having a vision or a desire to become a CEO when I was 15. So that would have been a little bit, overly confident for that age. But it's just by doing what I like to do and doing it well.
Did the footballer and the skier in you? Did the footballer and the skier in you? Everybody read your bio, and we read what you like. We read about this young lad in Lugano going off to do it as his apprenticeship. Did those skills of, skiing and football, did that give you the extra kick?
Well, it's a good point, because the football days learned me how to be part of a team and play together, and the importance of a team. The skiing time also took out the other part of my personalities, where I like to go in early in the morning to ski on my own, and maybe is a good mix of maybe also the leadership and my personality. I don't know, but probably you are raising an interesting point there. So
good. Well, we'll have to pursue that conversation at another time over a glass of wine. Look, you've negotiated so many deals, right? You've met phenomenal leaders, captains of industry. To the people who are watching this today, what advice would you give to them when it comes to negotiating deals? What's the core skill that you've built?
Look, the technical part and the understanding of the dynamics that are there is given. I think that in negotiating any transactions, you need always, particularly in, particularly when you have, a client's, involvement that is there, which is the vast, clearly the vast majority of the cases. Is to always put the client interest first, because not only you do the right thing, but also it's the best way to create a sustainable relationship and reputation in the market that will lead into more transactions and more and more value added for clients and for the organizations you're working for. So I think that in some cases it means also saying no or giving up on or advising against doing a transaction. It's very important to be able to say no to transactions, or to certain situations that comes to you, and particularly to advise clients not to do things. It's very easy to tell clients to do some things. It's not so easy to tell them not to do things.
Sergio Ermotti, outgoing CEO of UBS, I thank you for your time, sir, and we wish you luck.
Thank you.